You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group and co-hosts Uncle Mike TOSAW from St. Charles Wealth Management, Mark the Greasy Meatball Sebastian from OptionPit.com, Andrew the Rock Lobster GIOVINAZZI from OptionPit.com, and Henry the FLOWMASTER Schwartz from CBOE. The Option Block is brought to you by CBOE. CBOE's suite of S&P 500 index options, SPX and mini S&P 500 XSP options, allows traders to speculate on the direction of the market, generate income, and hedge for downside protection of their portfolio of stocks. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/SPX today to learn more. The views expressed herein are those of the speakers and do not necessarily reflect the views of CBOE Global Markets Incorporated or any of its subsidiaries, collectively CBOE. The information provided is for general education and information purposes only. There are important risks associated with transacting in any of the CBOE products or any of the digital assets discussed here. Before engaging in any transactions in those products or digital assets, it is important for market participants to carefully review the disclosures and disclaimers contained at www.cboe.com/US_disclaimers. These products and digital assets are complex and are suitable only for sophisticated market participants. These products involve the risk of loss, which can be substantial and, depending on the type of product, can exceed the amount of money deposited in establishing the position. Market participants should put at risk only funds they can afford to lose without affecting their lifestyle. And now, get ready to hit the Option Block.
All right, everybody. That music means we are back, and indeed I am back. Did you miss me? My name, of course, Mark Longo from the OptionsInsider.com, as well as from the network upon which so many of you are binging on while I was away down at the annual FIA Boca Conference. Intriguing event. A lot of great stuff going on out there. I ran into FlowMaster's best buddy, Mr. Ken Griffin. Lots of fun there. No fan of AI, that guy. So I may have tweeted something about that from the show. So intriguing stuff out there. A lot of people listening to the network, coming up to us at the event. All sorts of people want to do all sorts of fun things on the network. So it should be an intriguing time going for. I felt like the belle of the ball walking around down there. It was a fun conference, to say the least. Lots of fans of what we're cooking up over here down there. If you're a fan, if you like what you hear, throw a like, a star, a comment, whatever it is you feel like doing. All of it in aggregate does help new people continue to discover the content. Content like I did sit down with some of the folks over there at CBOE, chatting about what's new, what's coming down the pike, their thoughts on all the crazy hot topics of the day, like 0 day and everything else out there. What are we going to do with 1 day VIX? All of that fun. That'll be hitting the network soon. Our pro folks will be getting that first. So if you want to check that out, the optionsinsider.com/pro is the place to go to get your hands on that. Got an awesome first ever double pro Q&A tag team with Mr. Dr. Vix. And because you folks requested it, Miss Carly Garner coming up next week. You folks, you say you want them to debate. I'll see if I can prod them to get them to debate We'll see, but you get double dose coming up next week. So get over there. You want to get access to that one. First time ever, 2 people in the hot seat at the same time. Will they come to blows? I guess we'll find out. TheOptionsInsider.com/pro is the place to go to learn more as we go around the horn and see who's joining us out there today. First, let's go out to a quiet, a sleepy, some might say nothing going on out there except a Costco and some farm fields. But that's where you'll find the man known as Uncle Mike, a.k.a. Mike TOSAW from St. Charles Wealth Management. Uncle Mike, how are things in the St. Charles Costco today?
Well, I mean, let's be fair. Sometimes you got to go to Skippy's, if I'm not mistaken, from what you tell me, right?
I don't know. They have yet to cut me a check, so I'm done with the decade of free plugs that I've given those people.
You're done with the free plugs with Skippy's. Things are good out in lovely, wonderful, sunny, scenic St. Charles, Illinois.
All these people lining up to do all this stuff with the network down at FIA Boca can't get a single red cent from the folks at Skippy Zeros that I have plugged for a decade. So you know what? I turn my back on those folks, pshaw. And I turn instead out to the shores of Maine where there are no Gyros because who would buy them? Because who would live there? It's an insane place to live, except for one person, the rock lobster himself, Mr. Andrew GIOVINAZZI from OptionPit.com. Mr. G, welcome back to the show. You had a second free reign episode on Monday. How was that?
I think you know what, the only disappointment was we just didn't disparage you very much. We got on this roll talking about exercising calls and stuff, and we totally forgot to use our bully pulpit.
I will admit I listened.
An opportunity to be quite honest.
I listened to the.
Yeah, we dropped the ball on that one, no doubt.
I will admit I listened to roughly the first half of the show. I got called away, but I listened as much as I could, and I was surprised at the complete lack of disparagement. So that was a pleasant surprise for me as we keep on rolling around the horn. You had your opportunity. You squandered it and said, let's keep on rolling out to CBOE East. Unfortunately, the FLOWMASTER not joining me down in FIA Boca this week, but he's joining us on the show this week. Of course, Mr. Henry Schwartz from the aforementioned CBOE. Mr. FLOWMASTER, welcome back to the show, and you missed a fun time down in Boca this week, sir.
Well, I'm glad to be here. I'm glad you had a good time down there. I definitely want to get a debrief. I know CBOE I think we had 18 or 19 people down there, a lot of high-level conversations. So that's why you were there. And I was here just digging through, unusual option volume. Actually, I'm getting ready for a trip to London. I'm going to go do a little state of the industry for some clients over there and visit some people. So, and then I'm also getting ready for OIC, which is in 5 or 6 weeks.
Yeah, it's coming up
North
too.
Carolina.
Crazy. It's conference season, listeners. You know what else it is? It's trading season. So let's get to it. A little bit of the old trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block, the portion of the show where we dive into these rock'em sock'em robots markets, see what's lighting it up out there today. I go away for a couple of sessions. These crazy cats break the market without me. We get some juice, we get some vol, we get some red downside, VIX north of a 15 handle again. What's going on? Things are popping off. Coming back into the show, we are red on the day, not quite as juicy on the vol front, but then again, the day is young. The worm has yet to turn. As we're coming into the start of the show, S&P off almost 0.5%, about 0.45%. I think some of that weakness in Uncle Mike's favorite sector, the dollar store sector, just weighing on everybody. And then the Dow off about 0.33%, NASDAQ off about exactly 0.5% as well. So a rare day where the NASDAQ and the S&P both kind of moving in lockstep, which is weird. And then saying the hell with everybody. Small cap saying, we're going to sell off almost 2%. So in small caps, it is nearly a rout. And in everything else, it's kind of like, shrugging the shoulders. So again, that's why we say small caps, definitely one of the more fascinating equity stories of 2024. Certainly something, if you don't really pay attention to small caps and haven't historically, this is probably the year you may want to at least take a gander at what's going on. Pick your poison. And RUT and IWM, I don't care which one you're using, but yeah, it's there's some stuff afoot out there today. All that means coming into the start of the show, VIX is actually down from where these yokels had it on Monday. It's at about a 14.5 when we kicked off the show. Down a full point from where it was on Monday. So they had some juice to talk about on Monday. VVIX, man, It's like I was an oracle or something when I said on the show just last week, VVIX getting down, it was about a 77 at the time, 78. And I said, when it gets down to about 75, if past its prologue, it ain't going to hang out here for too long. And sure enough, here we are at about a 90 right now. Actually, technically a 90.5, up about 8.5 points from where it was just on the Monday show. VXX 14 down about half a point. UVXY was at a 7, down about half a point. Good old SVIX taking a bit of a hiatus out there. SVIX 39.75, managing to get a little bit on actually 39.85 right now. Still puts it up about 1 1/3 points from where it was on the Monday show. We've been talking a lot. I know Russell and the Meatball, both big fans of SVIX. Both of them, I think, have recently, Russell definitely, I think the Meatball may have as well, gotten out of Dodge out there. So we have seen some weight on it to the upside. So intriguing stuff out there. And let us not forget our old pal UVIX. We kicked off the show at about a 10.10, down a little over about 1.1 points out there. UVIX having quite the rock'em sock'em week when I was away as well. So a lot to unpack. Let's go around the horn the opposite of the way we started. Let's go out to the land of CBOE East first. Mr. FLOWMASTER, sir. Well, we did miss you down in Boca. It was a fun time. I met some of your new cohorts, new colleagues. I will admit the CBOE briefing this year, a lot of new faces, a lot of new names, which was certainly interesting. I can't recall the last time I heard about Canadian depository receipts at a CBOE briefing, but that's what we're getting now. So new times in CBOE global markets. But what's catching your eye out there this week, sir? And also, if you want to give us a little sneak peek, a little taste of your state of the industry that's coming up in London, have at it, sir.
Sure. So, I mean, it's, I've been updating, my deck for this week, and, volume is still, really off the charts. March is averaging 50 million contracts a day. And, I think today will be right around that level. So we've certainly had some action. We're getting through macro. There's macro events going on. There's meme stock activity, meme stock style trading. Crypto is still very, very much in everybody's mind as well. So it's just been a really nice mix of activity, very, very brisk business. We continue to see, one standout thing about, how things have been this year is we're seeing increases in all segments, meaning ETF index and single stock option volume is up across the board. So we've had some meetings, where people are trying to figure out, well, where's the growth going to come from this year? And it kind of feels a little bit holistic, right? We know 0DTE is solid. I think it's kind of leveling off a little bit. People are used to it, and we're seeing some other places where that's becoming available to trade. But I don't think that's going to be the growth story this year that it was last year. I think it's coming from kind of all over the place. And one other big thing is is market maker activity is actually up more than customer activity in the last few months. And so that's a different dynamic, right? When you and I were market makers on the floor, we didn't love to trade with each other, right? Because we were all kind of trying to do the same thing. That seems to be kind of changing. And, so that gives us a lot to kind of talk about and dig into and try to figure out what's up.
That is really weird to me. I mean, what's the first thing you would ask when an order came in on the phone? Who's it for? And if they said a local or something else, you're like, okay, I'm nope. $2 wider now. What do you got? So the fact that they're putting up more of that flow, wow. I was just at a briefing with the proprietary traders group down at FIA. If I had known that data point, I definitely would have brought that up, because that is definitely weird. Not exactly a thing most market makers like to do. But I need to see. Now you got me intrigued. Now my radar's up. Now I need to start digging into that's why we bring the FLOWMASTER on, listeners, to embark us on all sorts of fascinating journeys. Give us homework after the show. Let's go out to the shores of Maine. Mr. Rock Lobster, what's catching your eye out there this week? And B, what are your thoughts on that somewhat surprising data point that market maker to market maker paper is up, sir?
That kind of blows me away.
Like when you got an order and let's say you were, I don't know, a dime at 30 cents. And then he said, oh, it's for a local. Okay, no bid at $2. Right?
I'm like, why? Why would you trade? Why would you trade with it? And when you're a local, why would you pay up? Like, I don't. But anyway, I just apparently I know very little about how to make markets these days. So whoever's doing it now has got to figure it out.
Citadel really wants that paper from Susquehanna and vice versa. Why not?
Exactly. So, although I did have Yaz come down to the floor once and talk to me about Conseco. That was probably my career highlight. Was I met the guy who's actually made $1 billion trading options. So,
if I had known that, I would have asked FlowMaster's buddy, Mr. Ken G, this week. Why is he trading so much with IMC and Susquehanna? That would have been a good question.
Exactly. Well, that's another thing I would ask is why are you trading with Citadel?
Yeah, yeah, exactly.
Like, I already knew not to trade with Yaz, but why would you trade with Citadel?
Who's on the other side of the phone? Oh, Citadel. I'm no bid at $5. What you got?
Exactly. So, I think Citadel and Susquehanna is probably so smart now that they're trading with you and you don't even know it. So, I would guess those guys haven't got less smart over the years. So, anyway, what I would say, and I saw another statistic today, which I think would warm the cackles of Henry's heart, as I believe equity option volume, I think notionally now is higher than the actual equity volume itself in the stocks. So, if you do 100,000 contracts is what, 10 million shares.
Yep.
So option volume, when you do that notional multiplier thingy, is higher than equity volume, the actual equities. So, and when I was a young whippersnapper, I always thought this was a growth business. I'm growing on the other side of it now, but I always wondered why people didn't trade more options. But again, it's a learning curve that I'm learning after teaching retail for 13 years now. I'm actually learning how to teach retail. Like, Andrew, you actually have to say stuff that people are going to understand. So anyway, I guess that's what I have this show for, which it helps me do that. But anyway, so one thing I would say is volatility curve is still relatively flattish in the front, contango in the back kind of thing. Which is, and this morning I saw you would think on a Thursday, stocks aren't doing much, that you would see a bit of a pullback in the 2-week vols in SPX. And they're up again today. So you got a 0.5% move. And 9-day volatility is looking like it's probably going to close above 16%. So 9-day VIX, that's probably, I would say that's one of my favorite indicators from the CBOE. And everybody looks at VIX and then 3-month VIX. I guess that is if you're institutional. But if you're kind of trading short-term stuff like me, the 9-day over VIX is always, I like that indicator. It's really, you get a good sense of if dollars are coming into the short-term options in SPX. And I don't mean the 0 DTE stuff. I mean, because all of that stuff sort of resonates down the curve. If they're coming hard for shorter-term stuff, all the other options tend to, all the Vega weighted vols sort of rise down the curve. But and so today it's up. So this is what's weird, right? We still have this market up, but VIX making higher lows. This pattern has not broken. And I don't know when it will or what will make it break, but it still exists. So, if I see a pattern and it's not breaking, I'm going to write it. So what it also hasn't delivered is it also has not delivered a real sustained spike in VIX. So we haven't, we had that one day where we had that squeeze. I think that contract squeeze on expiration and last expiration in Feb. But we haven't seen really any sustained volatility over. We've had 3 days, maybe 3 days closing over a 15 VIX in the since beginning of November. However, Volatility made a low December 14th, closing low, and it has not sniffed it since. And since then, today is going to be another day where we have headline event, CPI, PPI, all this kind of stuff, and volatility is not going down. I mean, it dipped and now it's back up. So, like, if you're trading and you're looking at this, you're like, that is not benign volatility action. And I can't tell. Personally, I don't think it really matters, but I think a lot of the vol was bid because we just kept going straight up. So upside vol was picking up more of a bid than normal as just the vols dragged higher. And I think we're still stuck with that. And there's been no, I mean, we're down, 27 points from all-time highs, 27 SPX points. Feels like we're down 4% today. So anyway, I still think there's something under the hood. I just don't know what it is.
That's kind of the question we've been asking for months now. Is something is lurking? We just don't know what it is or where it is. Everyone's speculating. You got your buddy VIXologist tweeting about the mid portion of the VIX curve and what the hell's going on out there, and all these crazy things. We're at all-time highs, but gold is still frothy. Vol is remaining weirdly firm. So not the usual context in which you encounter all-time highs in the equity market. So very strange stuff. When things get strange, there's only one place to turn, listeners, to walk us off the ledge, calm us down, let cooler, saner heads prevail. It is the land of St. Charles, where if he can put aside the delicious $1.50 Costco hot dog and soda combo for a second, Mr. Uncle Mike, sir, what's catching your eye out there in a not Uncle Mike type of day, especially if you're slinging small caps, sir?
Yeah, no doubt about that. Well, I mean, it's exciting from the standpoint for me that I'm just looking at our covered call strategies. We're like right at a lot of them. We're like really close to our short strikes, and it's going to be some of our covered calls have gotten called away for the month, and there's going to be some that are right on the borderline tomorrow. So for the most part, we're pretty close to a lot of our short strike prices, and it's always exciting when you can do that. It always at least makes you feel pretty smart in that you're like, I pinned the market, by gosh. But with that being said, with the market that we have right now, yeah, Andrew's right. It does feel like we're down like 4% today, and we're only down 0.4% in the market itself. A couple things of note: we still have silver up there at what seem like fairly high levels for silver. We're knocking on the door at 23 at least with SLV, but down on the day-to-day very slightly. But nonetheless, we're still riding high from that. We are getting a sell-off in the bond space, and that we got the sales happening in the 10-year. We have sales happening in corporates. If you're looking at LQD, the corporate bond ETF, we got sales going on there, or we have selling going on there, I should say. Just to kind of give you an idea with the mid cap being down almost 2% on the day. I mean, that's something to where people look at that, and a lot of our clients are diversified, but they're looking at their portfolios today and saying, "Oh, the S&P is only down this much, but holy shnikes, look at that! Look at the small cap section of the portfolio." And that's going to be kind of a surprise to people at times, just because it shows that it doesn't necessarily mean that just because the S&P 500 is doing well, that the other sized sectors are going to also do well. Of course, the big mover of the day, at least lighting up my tape right now, we have NVIDIA down over 4% on the day, but it's NVIDIA. That's really no big deal. And we have Tesla down almost 4% on the day. So we're getting some selling happening in some places that last year were known for buying. And that's what I'm seeing right now in this marketplace.
Let's see if those places are known for some buying or indeed some activity out there today. Let's find out. The spoiler alert, the answer to most of those questions is yes, listeners. A bit of a banger day. So the market liking itself a little bit of this red on the screen and a little bit of maybe early whipsaw action out there. Coming into the start of the show, we are seeing some paper on the tape in VIX land. I was just trying to parse to see what the heck they are up to out there, because almost 800,000 contracts on the tape already, listeners. 797,000 to be precise. That's against an ADV of only 691. So spoiler alert, that is going back up. Looks like maybe they're unwinding some of the May, like 40,000 of the May 60s have traded. Looks like against AUG, 100,000 of the AUG 42 halves. All sorts of funk afoot out here. I had the others. It was, May, 29,000 the May 60s, 172,500 at the time. They've done 100,000 total now of the AUG 42 halves. So it looks like it might be our 1x5 friend coming back to play, because they also did 14,500 of the AUG 20s. So that would be 14,500 versus 72,500. Still keeping it 1x5, but going 20-42 half. If you've been listening to vol views, you know they've been higher, 22 roughly, and then 47 half has been their strike of choice. So maybe they're taking an opportunity to roll down a little bit, get a little bit maybe beefier, meatier strike there. Either way, 42 halves, is that going to be the new strike everyone's fixated on? You look right now, the term structure, it's 47 half across the board every month. So maybe a little bit of 1x5 action in the 42 half in AUG this week. Either way, we'll get to more of that obviously tomorrow on vol views. Either way, a lot of paper in VIX land today. SPY saying, don't forget about me. 5.7 million contracts on the tape in SPY. So yeah, they're lighting it up out there today. The ADV about 8 3/4. So SPY, man, lighting it up. The S, not to be outdone either. 2.1, already over 2 million contracts in the S. Man, 2 million contracts used to be an incredible day. That was a near record day in the S, and you hit 2 million contracts. And now it's, 2 million by noon, not even noon. Why not? That's where we are, listeners. ADV 3.25 million. Small caps, like we said, literally on fire in the wrong direction for the bulls. By the way, Uncle Mike, if your clients are confused or surprised to see this in small caps, they obviously have not been listening to the show. We've been saying all year long, man, small caps march to the beat of their own drum. they just do what they want to do day in, day out. Today, they have the bit in their teeth to the downside. 1.18 million contracts on the tape in small caps, listeners. The ADV about 1.25 million. So already almost at a day's worth of volume right now, right around 11:30 Central, listener. That's crazy cakes. And the Qs, 2.25 million. The ADV about almost 4 million out there, 3.91 million. Let's get out to single names. I know it's a lot of you are asking what's cooking in the single name land. And again, it's kind of a weird day. We're seeing a lot of green in some of the Magnificent Seven, including our old friend Alphabet Class A, 142.5 up 2 3/4, nearly 2% today. Good for 277,000. So again, 277, very respectable break-in level for the top 10 today. It's not 360, 370, but it's not 150 either. So a very respectable. Number 9 off to crypto land. Man, this name has just been all over the place. Marathon, $18 pretty much even right now, off about $1 2/3 or about 8.5%. 311,000 contracts. This thing has been from 15 up to nearly 30 and back to 15 multiple times over the course of the last couple of months. It's like it's back on the latter portion of that trajectory again. 311,000 contracts. And number 9. Number 8, the Amazonians, again looking a little bit green today, up about $1.10, trading 177.60 right now. Good for 313,000 contracts. Number 7, Hood. Looks like Robin Hood. Bit of an interesting success story. They made some interesting comments down at the FIA Boca show. I tweeted some of those out if you follow us, listeners, including the fact that they don't do long-form options education. They prefer to do it in TikTok video snippets, and that they don't have any sort of actual options simulator technology at their firm, but they know a lot of their competitors do. So a lot of things that gave me the impression that still from an options perspective, Robinhood not ready for prime time. I know they're putting up a lot of flow there. I would like to see a lot more, support in place for the people who are putting it up. Maybe a little bit more on the education side as well, so the people who are putting up all this flow maybe actually have a sense of knowing what they're doing. But hey, maybe I'm a crazy person. Either way, Robinhood, $18, about $18.10, up about 90 cents or about 5.3%. Again, good for number 7 today. So Robinhood have a nice turnaround. They were languishing around 10. Seemed like forever. So obviously post last earnings on the back of this volume, on the back of the crypto surge, they're looking pretty good. Number 6, this is kind of a newcomer we've been talking about a few times of late. A lot of people have been. This is SoundHound AI. Of course, NVIDIA disclosed their stake and it was off to the races. Coming back down the other way today, 780 off 85 cents or nearly 10%. Good for 390,000 contracts out there today. So my goodness, what's lighting it up out there? I think maybe we'll find out. either today or maybe on oddities. Number 6, AMD, other half of the chip zone, 188 and a quarter, off $6.50, or about 3.3%. So no love for, dare I say it, the other NVIDIA. Ooh, I said it out loud. NVIDIA bull's going to come for me. Number 4, it's the fruit company, maybe getting back into a little bit more respectable territory on the volume front. Number 4, 702,000 contracts. Again, Apple looking green today. So it's a weird day, listeners. Small caps, you'd think the world was ending. S&P and NASDAQ not looking great, but a lot of the big names that we attribute to driving this market are actually green today. Apple, 188, up about, actually at 173 even right now. So nice little day for them. Number 3, all the way up at number 3 today. What's going on in ye old softy? Number 3, 765,000 contracts, up 860, or a little over 2%, trading 423 and 3/4. So again, more AI stuff, new AI powered, looks like cybersecurity tool. More buyers than sellers at the end of the day, listeners. Good for number 3, 765. Number 2, you can probably guess what it is. Uncle Mike already talked about it. It is NVIDIA, 1.17 million contracts on the tape for NVIDIA. NVIDIA, 872 and 3/4, off $36.10, nearly 4% today. So not a great day for the NVIDIA bulls. Man, I missed my chance on those June 7 halves. We were talking about them, the puts. And, I got called away to Boca. Duty called. And those puts, I'm sure, I haven't checked them lately, but I'm sure quite a bit more expensive than when I was looking at them. Apple. What am I doing pulling up Apple? Number 1, listen, it's not Apple. It hasn't been Apple in quite some time. It's Tesla. It takes a lot to dethrone the king. 2.18 million contracts on the tape. Tesla, man, they were just threatening 200 again not too long ago. Here we are back, 162 and a quarter, off 7 and a quarter. Guess the news of a pending bankruptcy of one of their emerging quote-unquote rivals, Fisker. Not exactly good news for the entire sector, and they're feeling that weight today, off 7 and a quarter, about 4.25%. Worst performing stock in the S&P 500 right now. That's a dubious honor for Tesla. Man, they're off nearly 40 handles in the same space. Well, obviously, NVIDIA has fallen more than that recently, but percentage-wise, not quite the mauling that Tesla has been under. If you're still looking for a little bit of earnings and you like a good mauling, then Dollar General had you covered today, listeners. Dollar sector just getting whooped. Dollar Tree yesterday, Dollar General today. Uncle Mike shedding tears for both of his favorite shopping destinations because they're getting just taken to the woodshed out there today. A lot of stuff. Build-A-Bear popping off today as well. So if you like that good stuff, we had Dick's Sporting Goods before the bell today. Hot reports for your hot little hands, listeners. TheOptionsInsider.com is the place to go to get access to those. Dick's before the bell, 187 and 3/4. They were pricing in 8.4%. Apparently, all is right in the world of brick and mortar sporting retail. They were delivering 14.5%, trading 215 even when we ran this report just a little while ago. They're at still close to that same level right now. Up nearly 27 handles. I didn't see the number from Dick's, but it sure looks like it was pretty good, listeners. My goodness. Everyone's singing the death knell of brick and mortar retail, and here comes Dick's to say, man, hold my beer, kid. And then in the complete other side of the spectrum, we have Dollar General, also before the bell today. They were at 158.17 when we ran. Well, going into their announcement last night, they are currently at 148.5, so off nearly $10, $9.60. They're pricing at 8.4%, and now they're delivering about 6%. So surprisingly underperforming, even though from a vol perspective, even though they are getting a wee bit crushed out there, listeners. So yeah, a lot to unpack. Check it out for yourselves, theoptionsinsider.com. Right now, the season hanging out at, a whopping 120. It gets juicier. I go away for a couple of days. It gets somehow juicier, listeners. 127%. Our long-term average, which is already juiced to hell, is at 104%. Compare that to the pandemic days, and we were talking 78, maybe 84% return on the vol out there. Now we're at 127%. Already over 20 points above our long-term average, which is an already ridiculous 104%. So things are rocking and rolling. You ignore earnings season at your peril out there, listeners. And you know what? You ignore the odd block at your peril. So listen up.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, let's get to it, listeners. It's been a week since we chatted with the FLOWMASTER. It's been a week since I've been on this show, so let's see if I even remember how to do it all, listeners. But Mr. FLOWMASTER, let's start where we left off last week. Last week, you gave quite the masterclass on tender offer trading out there in CMI. I know a lot of our listeners were intrigued by that. Give us an update. Where do we stand? How did it come off, sir?
Well, I'm very flattered that you guys thought that that was a master class. I'm not a master in it. I dabble in it. But it was an interesting time, right? Because it was the first day of this 3-day VWAPing period for CMI. And then at the end of that, they published basically the exchange ratio. And to refresh people, basically you could trade in as a small account, you could trade in up to 99 shares and get a guaranteed ratio of the full thing, which was about 12 shares per share of CMI. Of ATMU, which is what they were spinning off, and they gave you a discount to as an incentive. So it's an interesting trade, and I'll have to say I learned a few things in this process. That trade, which looked like it had kind of P&L of around $2,000, just basically in the value of the discount, is actually looking worth around $4,000 today because. Weirdly, ATMU has rallied a couple dollars. So basically, based on the ratios, you turned in your CMI and you got ATMU at about $22.20 a share, and it's now trading around 26 bucks, I think. So now what's funny though is you don't have those shares yet, right? So and that's what we were kind of talking about is people try to hedge that risk, and so the risk is kind of working in your favor for people that didn't hedge it. And I've become a little bit more familiar with some of the tricky parts for people that do hedge it, because until the shares really hit your account, there are some outlier possibilities that they could extend the tender or they could change their mind, and then you'd get back your other stock. And if you had a hedge on the target, but that you got back your original one, you have all sorts of trades to unwind, and there's some interesting market dynamics. So far, that trade looks like a pretty big winner, though, for anybody that did it. And maybe pay attention if you didn't do it. You could do this as small as you want. You could literally buy one share of CMI and trade it in for 12 shares of ATMU just to get used to the process. So maybe next time around. So that's one thing I got. One other thing is you were talking about that VIX ratio trade, and there was one yesterday, very, very similar, right? Yesterday, it was a buyer of 150,000 VIX, July 42.5 calls, selling the July 20 calls 30,000 times, so 5-to-1. And it looks like that's the same ratio, same kind of structure that they did today. So it's an interesting trade. I really don't quite get the payoff of it, right? They are paying a debit to get into it. They're long some, 150,000 of these far upside disaster scenario VIX calls, but they're also short a pretty big slug of the 20 strike. So it's an interesting one, right? They would lose money in a decent spike in volatility, and they'd make a fortune in a major spike in volatility, and that maybe that reflects what they're actually trying to hedge. So I thought it was kind of interesting, but it's good to see, the one very, very large account kind of repeatedly making use of the product.
Yeah, they love that 1x5 or that type of rate. They've been up to 47.5 has been their strike du jour forever, it seems like. And then now you're right. It seems like maybe they're adjusting, going down 42.5. You're right. We've talked about that on vol views many times. It's very wide. We like a good ratio upside vertical in VIX. I don't know if 20 odd handles is the way I like to go, because you're right. There's a lot of room in the middle for a lot of bad things to happen with that spread. But it is certainly intriguing. Mr. FLOWMASTER, Mr. Rock Lobster, any thoughts on what the FLOWMASTER's put down on the tender? Because I know you were intrigued by that as well. And then more action with our upside ratio friends in VIX land. Any thoughts, sir?
Like the same as last week. I wish I would have paid attention to the tender more, but I just there's only so much that can come across my desk when I'm trying to manage 8 trades per week that I have to send out alerts and stuff at Option Pit. So, one of these days I'll be able to do more fun stuff like that. As far as the ratio spreads, again, interesting that they're back. And this was the didn't they sold the 20s and they bought all the 42 and a half, right? So
they've been doing that for a while. Different strikes, but they love this 1x5.
Yeah, I mean, I think this is a Vega trade pretty much that we've already discussed here, and for the listeners, it's what the trade looks like and how it performs when the vol goes up are two totally different things. And if VIX traded 42 tomorrow, it would not bother me hugely. But I don't think it's going to happen. But again, what they're just looking for is vol to go up. They're looking for 20, 25, something like that. And those 42 and a half calls just explode in value. So, I mean, I think for a portfolio hedge style trade, it's a good trade. But like any, when you're doing those back ratios, you don't want to hold them too close to expiration. Like my guess is they're probably looking to get out of this, June or May. You put on a July cycle trade like this to exit sometime in, before June, probably May, because that 2042 and a half, that connection on Delta or even the Vega performance might get a little less. It gets a little loose, let's say, as you get toward expiration. So, but yeah, I don't think it's a terrible spread. And you're just talking, VVIX is just 81 again, I think this morning or yesterday. So, it's, when vol gets that low, it's hard to lose.
And let's see what else we're winning or losing on out here in the odd block. Let's go out to a name we haven't talked about in a while. This is Bristol Myers Squibb, ticker symbol BMY, trading 52 and a quarter right now, off about 40 cents on the year. Let's see what kind of year we've been having out here in the land of BMY. And spoiler alert, it ain't great, listeners. A year ago, 66 and a half bucks. So they're off about 14 and a quarter, a little over 21% on the year. They did rally it to the high for the year of around 71 bucks last April. So shortly after the start of our year, going back obviously 12 months from now. And since then, listeners, it has pretty much done nothing but sell off. It got down to the low for the year of 47 and a half bucks. So I suppose that was on February 1st. So if you want to look for a bright spot, it is up roughly $5 or pretty close to it, about 4 3/4 from February 1st. But that's pretty much your only bright spot out here. And Mr. Flowmaster, looks like good old BMY came across your radar out there today on the put side, sir. What did you find?
Yeah, so we've talked about my trade of the day little query, which I swear I'm still working on. And in fact, I dug into it. I turned it into a trade of the week specifically so that we'd have an easier time finding things to talk about on the show. And then I sorted kind of the top 50 in terms of just absolute dollar P&L. And, no surprise, NVIDIA and Meta were at the top on the from actually, I think from a couple of big moves last week. And I'm kind of avoiding those because we've been talking about NVIDIA forever. But in Bristol, what the trade showed up, it was a buyer of 1,900 of the March 22nd, 54 puts, paying 66, almost 67 cents on a sweep, and those options closed at $1.57. And so, I like to kind of look for these trades that they're not humongous. This is $128,000 capital outlay. The option basically was up 135%. The stock was down about 3% from when they put on the trade. And so it's just it's a nice illustration of the leverage and the convexity you get in options. It's one of the reasons people, that we believe that the smarter, more quantitative traders really gravitate towards them, because if you really do have a view and you're going to be right, then obviously, if you have your choice of buying the stock or buying an option, the payoff you get in an option is, multiple times better for the capital. So just a straight outright put buyer, and the stock sold off, and it was an interesting one to see.
Can't wait till we can get that out to the masses. Since we're having such a good time with the FLOWMASTER, let's do one more, Mr. FLOWMASTER. Why not? The people demand it. Let's give them what they demand. Let's go out to a newcomer. I do not believe we have discussed this ever on the network, either on the Odd Block or on Oddities. This is Up FinTech Holding Limited, ticker symbol FLOWMASTER, or Rock Lobster knows how much I love this. TIGR. TIGR. So about the least appropriate ticker you could think of for this one. $4.50 right now, off about $0.50 or nearly 10% today. So they are not loving Up FinTech Holding. We got to get going, so I'll just dive right into it. 52-week low, 2 1/3 listeners. 52-week high, 580. So it's closer to the high than the low, but still off its highs for the year. Mr. FLOWMASTER, this one came across your radar out there as well. Looks like some action to the upside, sir. What'd you spot?
Exactly. Now I'll tell you, we've actually had meetings with these guys because they do have TIGR Brokerage is a relatively new electronic broker along the lines of something like Robinhood or Webull, and it's possible now, but it's also based out of China, so there's a lot of or at least their kind of parent company is. So there's all sorts of kind of macro considerations as well, and I don't know if you've been watching, but I think Robinhood stock is almost doubled, more than doubled, like in the last 6 weeks or so. I think it's around $18 today. It was at $7 not that long ago. I think maybe 2 months ago. Today it's trading at 18. So in TIGR, it's possible this is a play, basically kind of a sympathy play on how Robinhood has been behaving. But what a couple of trades showed up on my, basically, on the biggest winners of the day. Specifically, it was like a 2,900 lot of the July 7 calls bought for 14 cents. Those closed at 19 cents. And then also the 5.5 calls bought for 15 cents, which closed higher. And so on the day, though, volume was very, very heavy for the name, which really is pretty thin. And in the end, the biggest positioning was almost 30,000 of the July 7 calls traded and opened up 25,000 contracts of new open interest. So, it has pulled back a little bit today, although I think they're still trading above where this entry was. So, this is, like I said, there's plenty of kind of super speculative action going on, and I think this falls into that part, but 30,000 contracts that's certainly enough to pay attention to.
And we need to pay a little bit of attention to what you folks have on the brains. Let's go a little bit of the old mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody. We got some hot questions of the week to dive into right now. Last week, we asked you, coming up on the 2-year anniversary, hard to believe, coming up on the 2-year anniversary of the modern zero DTE era. I don't want to hear arguments about how 0 day existed in the past or all that stuff. I get it. But the modern era started in April, nearly 2 years ago. So on that anniversary, coming close to it, we said quite simply, are you trading 0 day options? Heck yes, heck no, or not yet, but I'm curious. 50% exactly, not 50.01, 50% exactly saying heck yes. 43.8% right behind it saying heck no. Again, showing how divisive these products still are for a lot of our listeners out there. And then 6.3% saying you're on the fence, not yet, but you're curious. So again, our listeners, again, rightfully so. You're right to have questions about these things. You don't have to dive in just because everybody and their mother is trading them. But fascinating stuff nonetheless. Let's fast forward to this week. I want Uncle Mike to put on his thinking pants on this one, see what he thinks. Because right now, listeners, we were talking about this, I think, on a recent episode of Options Bootcamp, and somehow we realize we've never actually asked you this question. All the years we've been polling you folks on various things, this one has never come up, but a very relevant one, very simple one too, at least deceptively simple. How many options positions do you normally have open in your trading account on a given day, listeners? Gave you 1 to 5, 6 to 10, 11 to 15, or north of 15. Mr. Uncle Mike, you're kind of a weird case. I guess I won't ask you because you got to include all your client stuff in there, and then you'd probably be well into the hundreds. But if you have a guess on where our audience is hanging out, sir, have at it.
No doubt I'm a weird case. You can say that for a lot of questions. I will say our audience has roughly, on average, I will say 20.
So you're going to say north of 15 is winning?
Yeah, I'll say that.
All right. Mr. Rock Lobster, what's your guess, sir?
You know what? I'm going to say, what is it? I guess 10, like 10-ish. What's that? Whatever that is.
So that'd be 6 to 10. Okay.
6 to, I'm going to say 6 to 10.
All right, Mr. Flowmaster, you crunch all the numbers, so don't cheating. What is your prognostication? Where do you think our audience is falling, sir?
I'm going to go even lower because I think with the 0 days, you know, some people are really doing 1 or 2 trades a day, but they're doing it every day in a row. So I'm going to go for the low end.
I knew the Flowmaster, he would be on the side of the audience. He has the data after all. It keeps moving while I'm looking at it, listeners. Stop voting, dang you, so I could see the results. I'm just kidding. Keep voting. I'll just move with the rolling count here. But right around 61.5% right now, coming in the 1 to 5 range. That makes sense to me. I know a lot of our listeners have many more than that because you're super hardcore. But a lot of you, like the Flowmaster says, you like to babysit a couple a day. You're still doing a lot of options trades every week and every month, but per day, not as many. 6 to 10, 19.8%. Then north of 15, then I know you hardcores out there, about 13.9%, and 5% in the 11 to 15 range. Get out there. You got about a day left on this one, listeners, if you want to make your voice heard. Our ProLip member Age chiming in saying, I understand that I'm an idiot, but I don't understand how many retail customers manage 50-plus option positions at a time. Yeah, if you have that many, that may be a wee too much. Then you're borderline market maker territory. But yeah, you know, it is intriguing and a fascinating question that somehow we've never gotten around to asking you until this week. So get out there. A lot of you already have. Make your voice heard. Add options as we go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, let's do it. Let's go around the block. And since we're starting to come up against it, let's do a combo. Let's do a combo of around the block as well as where folks can go to learn more of your, as the Rock Lobster calls them, good goodies. Let's start in the land of St. Charles. I think he has finished his delicious Costco hot dog and beverage now. Mr. Uncle Mike, what are you keeping an eye on until the Monday episode of Ye Old OB? And then B, where should folks go if they want more Uncle Mike goodness in their lives?
Well, I am watching to see if bonds continue to sell and the shiny metals go higher. I think those are going to be some key indicators for us going forward. If you are looking to learn more about what Uncle Mike has going on, follow me on Twitter at Mike TOSAW, TOSAW, or feel free to check out my website, stcharleswealth.com. Would love to have a conversation with any of our listeners.
Really quick before you go, Mr. Uncle Mike. I had some guys come up to me at the FIA show asking me all about 3-month SOFR and wanted us to talk more about 3-month SOFR. And are a lot of our listeners excited about 3-month SOFR? I told them the answer. A lot of them like the 10-year. They're all 10-year like you. So I would put it to you as one of the biggest 10-year fans that I know. Do you play it all or even pay attention to 3-month SOFR at all?
No.
That's kind of what I thought.
I mean, yeah, I play everywhere. I'll just leave it at that.
All right, there you go, listeners. In the meantime, check them out. stcharleswealth.com is the place to go. Let's go to the Rock Lobster as well. Mr. Rock Lobster, what are you keeping an eye on until the Monday episode? And B, where should folks go if they want more good goodies in their lives?
I'm keeping an eye on, of all things, Tesla. I find its performance odd relative. Like, why are they picking that high multiple name as opposed to the others? So I think it's a curious one. Plus, I'm looking at opportunity to actually buy some stock. I don't really have, I don't own anything of any major importance right now, but it's on my radar.
Are you selling the one puts? Is that you selling the one puts, sir?
Exactly. Well, you make a lot of money selling the one puts.
Good business.
And then, just go to optionpit.com, 888-TRADE-01 if you want to, again, learn how to use options to structure positions so you can make money. And that is 888-TRADE-01, and we'll give you 10% off if you heard it on this here show. Yep.
There you go.
Something for nothing.
Meanwhile, he's got to go now, sell a whole boatload of one puts in Tesla. And see,
that would be it. Yes.
See how that works. Check out his new newsletter, Selling One Puts in Tesla, the road to fame and fortune out there. Optionpit.com, the place to go to learn more. And last but not least, Mr. Flowmaster, sir, what are you keeping an eye on until your next appearance next week? And B, where should folks go if they want more CBOE goodness in their lives?
So I will be watching. There's a couple more earnings. I think Nike's coming up and Adobe's today after the close. I did actually think one piece of news. I think this came out right before our management team went down to Boca, but the protected option rule was approved by the SEC, which basically means that if you own SPY in a core holding account, you can actually write index options, SPX or XSP, against it and receive a covered call market offset. The brokers have to do some work to make this actually happen. But if you're the kind of client that has, some amount of money stuck in SPY, first of all, because you like, owning S&P 500, but also for tax reasons, a lot of people just own it because they own it. They don't want to pay the taxes on taking gains. So they sell calls against it. Well, you can now sell an XSP, which is very, very close to SPY in price, or SPX calls and not have to put up naked call margins. It's actually a big deal. We've been waiting for that for a long time. And if anybody is interested in playing around with a trial of Trade Alert or Live Vol or Silex or FT options, just head over to cbo.com/RMA.
cbo.com/RMA. Also very interesting news for all you SPY holders out there. A few more options, pun intended, in your arsenal than perhaps you had before. That's going to do it for us on the option block today. But you know what, listeners? If you need a little bit more in your lives, don't you worry. Don't you fret. We got you covered coming up in a little bit. I'll be back talking all the action going up over there on the CME options. Our buddy Mr. Rich Excel coming on. He's always got some funky trades, some interesting analysis in his back pocket. What's going to make it onto the show with him this week? You got to tune in to find out. If you're listening live, hang out, have some fun. We'll be back in a little bit with the TWIFO live stream. Of course, if you're listening on demand, like a lot of you are, then hit next on your device of choice. TWIFO should be waiting for you there. Then back again tomorrow with a little bit of volatility views. Who's going to join us on the Vol Views hot seat tomorrow? You got to tune in to find out. Should be fun. And then after that, exclusively for our pro folks who come back with a whole bunch of options oddities, including a lot of trades. Just no time to get to on the show today. We did a lot of unusual activity today. A lot more to come. Check it out if you are interested, listeners, theoptionsinsider.com/pro, including you want to get in there now for next week's crazy double-header pro Q&A extravaganza. Never done that before. Should be crazy. See if we can prod those two to fight on the hot seat. Should be fun. theoptionsinsider.com/pro, the place to go. Then we're back again on Monday, another episode of the Option Block. Stay safe out there, everybody.
The Option Block is brought to you by CBOE. CBOE's suite of S&P 500 index options, SPX and mini S&P 500 XSP options, allows traders to speculate on the direction of the market, generate income, and hedge for downside protection of their portfolio of stocks. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cbo.com/SPX today to learn more. The views expressed herein are those of the speakers and do not necessarily reflect the views of CBOE Global Markets Incorporated or any of its subsidiaries, collectively CBOE. The information provided is for general education and information purposes only. There are important risks associated with transacting in any of the CBOE products or any of the digital assets discussed here. Before engaging in any transactions in those products or digital assets, it is important for market participants to carefully review the disclosures and disclaimers contained at www.cboe.com/US_disclaimers. These products and digital assets are complex and are suitable only for sophisticated market participants. These products involve the risk of loss, which can be substantial and, depending on the type of product, can exceed the amount of money deposited in establishing the position. Market participants should put at risk only funds they can afford to lose without affecting their lifestyle. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.